In this video, I will be speaking about USD JPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong monthly historical structure level. This zone was acting as previous resistance here. The market then broke it to the upside. At that point, started acting as support here, again support here, as the market is currently testing it. And from here, we could expect bullish price action to be developed away from this zone. So here on the monthly, everything seems pretty bullish. Dropping down on the weekly, what do we see? Well, from a weekly perspective, we can see how precisely the market is currently respecting this area. It was respecting it as resistance here, support here, against support here. We had only one break, which is when the market here went below and then back above the zone, but now the market is back to respecting this area quite precisely. In fact, it tested it here as support and is currently rejecting it to the upside. So here on the weekly, everything seems pretty bullish. Dropping down on the daily time frame, what do we have? Now, here on the daily, things get very interesting. Now, I did speak about USD JPY a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we wanted to see first this move to the downside, and then from here, the rejection to the upside, and that is exactly what the market did. Then from here, I made another breakdown explaining all the reasons for which we could expect first the correction, and then more bullish continuation, which again is exactly what the market did. And by the way, I will link in description this previous analysis so you can go and check them out for more free education. However, at the moment, what we can see is that the market is starting to create an M pattern. Now, in general, after the creation of an M pattern, what we could expect is a potential rejection to the upside for the market to complete the M pattern at the neckline, which is the previous support turned resistance, meaning that here on the daily, if the market will successfully manage to create this M pattern, we could expect a potential rejection to the upside for the completion of this M pattern at the neckline, increasing the probabilities that since the market is currently creating an M pattern, we could have a potential completion of the M pattern at the neckline. So if we will actually have the creation of this M pattern, how we could be approaching a potential reversal to the upside and completion of this M pattern at the neckline. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so for hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of this M pattern at the neckline. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.